What's the biggest story at the moment? Believe it or not, it's not K-pop group BTS visiting the White House. There's something even bigger going on. It is inflation. This is really a just pan global economic issue in almost all the developed countries and in a lot of the undeveloped countries as well, or medium level developed countries. And I have here a person who, among all the people at Southbank Investment Research, is perhaps most personally suited to talk about the topic of inflation. I won't call him Mr. Inflation because that's clearly an insult, but he is living in the land of inflation is a better term. His name is Rob Marstrand, and you may know him as the editor of UK Independent Wealth. Rob, thank you for joining us from sunny Argentina.
Yeah, hi James. It is actually a sunny day today. We're in winter, but it's a nice day. But inflation is, well, raging down here. Has been the whole time I've lived here. I actually first came here almost exactly 20 years ago in August 2002, and that was just after this country had had a massive sovereign debt default. So they defaulted on all the government debt, and they devalued the currency by about two-thirds. And that was probably the first sign of the sort of thing that government's going to get up to, because at that time they'd had their currency pegged to the dollar for a long time. And if you had dollar deposits in the bank, one day they were dollars, and the next day they were pesos. They forcibly exchanged them, and then they devalued them. So they basically took two-thirds of your money away, just like that, government diktat.
And just hearing that off the bat, Rob, that sounds like a reason not to come to a country. What drew you to Argentina in the first place 20 years ago?
Well, it's still a fabulous place to live. It's a big country. It's got a lot of resources. The people are lovely. Buenos Aires is a beautiful city, etc., etc. I mean, I originally got to know it through, a woman that I met who became my wife, and so that's how I got to know the place. And I moved here. We moved the whole family here eventually in 2008 because I'd sort of had enough of my banking career and wanted to just try something completely different. And why not try South America? As I say, I love this city.
And that's a great compliment to your wife, right? I mean, she's worth you're suffering the inflation to be there with her. So that's a wonderful thing. I mean, it sounds funny to say, but it's actually there's some truth under that.
Well, I think she was surprised because it was my idea. I think she thought we were going to stay in London, but I came up with the idea. I don't know why. But I like living here. I do like a good steak and a glass of red wine, and what better place than Argentina for that? Going back to inflation, I moved here in 2008, and I think from memory, inflation was around kind of 15% a year at the time, which sounds super high for anyone from the US or the UK or European countries. But actually, that's the lowest it's been since I've been here. It's just been going up and up and up and up. So starting around 15, let's say, then it was suddenly 20, then it was 25, then it was 30, then it was 40, then it was 50. We've had a number of years at sort of 40, 50-ish. This year, I think we're probably on track for 80 to 90% inflation.
Oh my God.
July alone was 7.5%. Just the month of July.
In a month, which is like more than a year's normal inflation in a developed country.
So it's raging. It's raging.
So let me ask you this, Rob. I mean, the underlying reason we're talking, obviously, it's interesting to hear about Argentina, but a lot of people may not be planning to go there. They live in the UK, where inflation is predicted to be as high as 18, 19% before too long. And I think a lot of us watching are probably extrapolating what happened in Argentina, which obviously is sort of a grandized caricature. It's not going to happen the same way in the UK, but some of the principles may play out in a muted sense across the Atlantic. So let me ask you, why is inflation so high?
Yeah, so I don't want to panic anyone. I'm not saying that the UK.
You can panic. We like lively stuff.
but I'm not saying the UK is going to have inflation at 80 or 90% anytime soon. But yes, clearly,
anytime soon. That means it could happen. You're saying.
Look,
I'm joking.
With a bad enough government and central bank combo, it can happen anywhere, of course. But I don't think it will get that bad. But who knows? Could get to 20%, could get to 25%. Who knows before it's corrected? We don't know. But the basic cause is the same cause of inflation everywhere: too much money being printed for the growth and productivity and size of the economy. Here in Argentina, it's a bit more direct. Central bank creates the money to cover the government's deficit, because they haven't got enough income to cover their spending. That creates loads and loads of new money, and basically the currency devalues at a rapid rate, and prices go up as a result. The peso is losing value.
Let me jump in on that quickly, though.
For are. I'm not sure whether this would be quite so appreciated in the USA, but in the UK certainly, people might find it slightly entertaining that the three-letter currency code. So for the pound, it's GBP. For the Argentine peso, it's ARS. I'll let people work out what word that spells.
We
But
can
it's
use
very
our
appropriate.
imaginations. Let me jump in with a quick question, Rob, on this though, because basically money printing is your response to how Argentina, got this inflation. They cranked up the printing press, and the same thing with Zimbabwe. The same thing with Weimar Republic in Germany. I mean, it's a fairly understandable story, but would it be? What about someone who says, "Well, wait a minute. In the UK, we've got inflation largely because of high gas prices, and that's terrible for now. But that's a specific and more resolvable catalyst. We do have some printing, but it's kind of a mix of the two. Is that a positive thing?"
Well, look, clearly there is pressure on gas prices because of the situation with Russia and Ukraine. Um, but the prices were going up before Russia went anywhere near Ukraine. The money was created during the sort of COVID pandemic. The Bank of England printed a huge amount of money, which essentially got funneled into the bond market, which essentially means it was used to prop up the deficit spending of the UK government. Now, the fact that gas supply has been restricted and oil supply has been restricted to a certain extent as well, has created an extra spike in some of these prices is obviously relevant. However, the money was created anyway. If we weren't being forced to spend it on higher energy costs, it would be floating around being spent on something else. So I think we would get the inflation somewhere else anyway. So yes, blame Russia to an extent, but we'd just get the inflation somewhere else if they hadn't invaded Ukraine, in my opinion.
Got it. So it's a factor, but there's still an underlying commonality. And let me jump to the next question then, which is in the UK, the Bank of England hasn't really done a lot yet. I mean, it certainly hasn't gotten draconian as far as stopping the inflation, and maybe it will. Let's foreshadow what they may do by looking to Argentina. What has Argentina done over this 2 decade cycle to try to stop the inflation?
Yeah, well, what they don't do is ever go to the root cause of it, which is to cut off the new money supply. But they come up with all sorts of patches and supposed fixes, which end up just making the situation worse. And I've got a
And
couple
that's
of
why they've had inflation for 20 years. They haven't actually fixed
yeah.
it
Well,
yet.
I mean, actually, they've had high inflation for longer than that, even, and they never seem to learn because they always try basically slightly new iterations of the same stuff, but it always ends up in failure. So I'll just give you some examples. I mean, this is mainly government policy as opposed to central bank policy, but things like price control. So they'll cap the price on fuel for your car, food, electricity, gas, water, utility bills, that kind of thing. Now, people say, well, that sounds great. We get cheap stuff. Trouble is, if you create a false price, you cut off supply ultimately. And so you end up with shortages. So I've lived through power cuts here. I've lived through, destocked shelves in the supermarkets. I've lived through, not being able to get fuel at the petrol station sometimes. So, yeah, that's one thing they do, but it doesn't work, or it can only work for a very short time because people just stop producing. If they're going to make a loss, they stop producing. Another one, high import tariffs. So cars, computers, machinery, very expensive because they put big taxes on it. So it's to stop people spending money overseas by bringing stuff in. And that creates shortages too, or just very expensive prices. High asset taxes, so wealth taxes. So if you have money overseas invested or in a bank account, they levy a 2.25% annual asset tax on the value of those accounts at the end of the year. Restrictions on buying foreign currency. So we have a very complicated currency situation here where there are about 6 roughly different exchange rates. There's an official rate, and then there's a black market rate, and there's lots of stuff in between. So if I have money in the bank, if I have pesos in the bank, I'm not allowed to buy more than $200 a month through my bank account at the
Wow,
official exchange rate.
that's almost nothing.
So they're forcing people, restricting people, forcing them to stay in this weak local currency. The idea being that that's supposed to prop the currency up, but of course it doesn't work. Taxes on credit card purchases overseas. If a local person here goes overseas, uses their credit card that's linked to their bank account here to buy, pay for a hotel or buy a meal, they whack a massive extra tax on top of that. I think it's something like 85%.
80. Oh my gosh.
Yes, some crazy number. And again, this is to stop you spending money overseas. So, for example, everyone takes Amazon for granted. Deliveries to your door. Amazon doesn't exist in this market. They haven't bothered. It's too hard. It's just my brother-in-law was amazed. He was trying to send Christmas presents to my kids, and he couldn't believe that Amazon don't deliver here. And then finally, export tariffs. So agricultural production, soybeans, wheat, corn, meat, some of the mined production, and even service industries have export taxes applied to their revenues. So this is the idea of this originally was to suppress the prices at home. So it's to disincentivize exports, which is crazy. I mean, what country wants to stop exports? Hey, but that's the sort of stuff they come up with. And back in 2008, during the global financial crisis, the government actually confiscated all private pension funds, which admittedly weren't that huge here, but they confiscated all of them to protect them from the crisis. Governments can do anything, and that's the kind of stuff they get up to here.
Amazing. I mean, first of all, that's far more draconian than I would have expected. I mean, that sounds like something you'd hear about in North Korea or someplace like that, or China. And second, it seems just like you said, they've done literally everything possible to do except actually addressing inflation, actually addressing the root cause. Do you think? I mean, I can't really imagine a lot of those happening in England. Do you think some of them are possible though?
Well, I certainly think capital controls are possible.
Yeah.
I believe the UK had capital controls back in the 1970s. So if we have some sort of currency crisis, you could see some sort of restrictions on, moving money in and out of the country, or even buying things from overseas, or extra taxes, import tariffs, that type of thing. I can certainly see that sort of stuff happening. Outright seizure of assets, I think, is unlikely, but governments can still sort of seize your assets any day by slapping a tax on it. So I wouldn't be surprised if we, in the future, not just the UK, but generally across the West, governments struggling to fund their aging population's healthcare requirements, for example, and pensions, could start levying asset taxes. So, people already kind of pay asset tax on their house through their council tax, but could they levy a tax on your bank balance at the end of the year, or your pension fund size, or your ISA investments? Possibly.
They could. Yeah, you're right. They could. Speaking of that, speaking of individuals, what do people do to protect themselves in Argentina if there is such a thing? And via extrapolation, what do you think people watching may want to start doing to protect themselves in the UK? I mean, again, to be clear, we're not talking about, hopefully not talking about 80% inflation in the UK, but even 18, 19, 20%, I mean, that's extremely high. I mean, that means your pound can only buy 80% of what it can buy the net. You're going pretty deep into the hole year by year, and hopefully it's not going to continue at that rate. But just to put it in perspective, I mean, that is a big tax. Some people even call
Oh
it a
yeah.
government tax on wealth, inflation. Now that's aggressive verbiage to some, but it is effectively a tax almost.
Well, it's the same result. That's
Yeah,
the point. You end up with less buying power with the money that you have. So whether it's whether the pound keeps its value and they take away 20%, you end up with 80p in the pound, or whether you keep your 100p, but the 100p only buys 80 pence worth. It's the same end result. It wouldn't take many years at inflation running at 15% a year for you to lose a lot of value on savings left in the bank, maybe making 1%, or in future possibly 2% a year of interest. So clearly you've got to do something to protect yourself. I mean, this is not strictly relevant to this, but maybe it's an interesting anecdote, if you like. I was chatting a few years ago to the guy that cuts my hair. It's just like a traditional old barber shop. And I was asking about some of the artifacts he had on the walls, sort of from the 80s and 70s. He's got interesting old, typewriters and phones and things. And he told me about life during hyperinflation here, which was in the 70s and 80s. And he said he would cut hair in the morning, shut up the shop at lunchtime, go out with the money he'd earned in the morning in cash, go out and buy his groceries for the day. And then anything left over, he'd go and buy some dollars to get hard currency relative to the peso. And he'd do that every day. So he never ended up with any cash sitting in
wow.
the local currency because it was devaluing. I think, I forget what the inflation rates were at that time, but we're talking hundreds or even thousands of percent.
Even worse than now. And his behavior itself contributes to more inflation, right? The faster they spend, the more it goes. Yeah.
Well, hyperinflation is basically the currency becomes a hot potato and you just want to get rid of it, get it out of your hands as fast as possible. But anyway, but even in these high inflation but not quite hyperinflation times, basically people want to get out of the local currency, so they want to get into something stronger. Now, that's always been the US dollar here, but of course that's a problem for people now because the US dollar is devaluing quite fast, with inflation rates sort of in the high single digits. So that's not great if you're sitting on cash in a safety deposit box, in large amounts. But that's something to do. Buy foreign currency, get out of your local currency. Own real assets. Surprisingly, the gold market isn't as big here as you would have thought, but there is some, interesting gold, art, collectibles, that type of thing. Bricks and mortar, obviously very, very popular property. So although property prices can go down in a crisis, if you're looking out far enough, 10, 20 years, a house is a house is a house. Flat is a flat is a flat. So people do that. They buy, if they've got smaller amounts of money, they might buy a car parking space, which is a piece of real estate that they can get rental income on.
It's practical. I like it.
But it might only cost like $10,000 rather than, $200,000 to buy a flat or something. Or a piece of land. Obviously, land isn't going to make you a big income, but it's sort of like gold. It'll keep its value in the long run. They're not making any more of it after all. Or literally, which this might be something practical for people in the UK. If you were thinking of extending your home, but you're saving the money to do that, but you haven't quite got enough yet, you might think about buying some of the raw materials in advance. So people here will, for example, buy a pile of bricks in advance of they may not do the project for a year or two, but they'll build up their stockpile of the bricks, using their money now before their money loses value and before the price of bricks goes up. So that kind of thing.
So you might see a house with just a pile of bricks beside it, and that guy is someone who thinks ahead.
Yeah,
Interesting.
and of course, in high inflation, people also buy their groceries in advance. So anything that's non-perishable, could be tins of food, could be bottles of wine, could be crates of beer, any of that kind of stuff. People buy it when they have the money as soon as possible, and then just stockpile it. And then, by the time they actually need it, the price will have gone up, but they've spent a bit less. So that's something people can do on
Just as a
smaller
thought
scale.
experiment, what's the success case for Argentina? Like if everyone went into a coma and you had to run the country and fix the inflation problem, what's the solution? You stop printing money, you raise rates, and then you just take a whole bunch of pain up front, and then things are better.
What you probably need is not just stopping the money printing, but you need, it's a much longer discussion, but it's kind of supply side reform. Another problem here is they have very, very restrictive employment laws and very, very complex and high taxes. So a number of years ago, I read a study by one of the big accounting firms on taxation of small and medium sized companies in 40 countries or so. And Argentina had the dubious accolade of being the only country that if a company paid all the taxes it was meant to, it was guaranteed to make a loss. So,
that's motivation right there.
Not an easy place to do business. But going back just quickly to other things to protect yourself in high inflation is also own foreign assets. So a lot of people do that here. They'll invest overseas. It might be overseas property. It might be overseas bank and investment accounts, overseas shares and that type of thing, and even bonds, although they're not great at the moment, obviously. Physical cash in safety deposit boxes, dollars again. But again, these days, I'd say you probably want to have gold, not dollars. That would be better. And crypto. They did some crypto. That's had a tough time recently, but a lot of early adopters here because that's a way that money could move around very freely without being caught by all the capital controls and things I mentioned about not being able to buy dollars, etc.
Yeah, it's volatile to most countries, but to, I guess, to Argentinians, it's appealing and has a certain safety. Yeah. Go ahead. Sorry.
Yeah, and those people that got in very early obviously made out.
Yeah,
like bandits, made a lot of money. So, but it's obviously risky now. And then simply being a little bit more fleet of foot, so trading the cycle. So I know lots of people here who've made large amounts of money, and we're talking, millions, by trading the cycle. So when there's a crash, provided they've got liquidity, they've got cash, they can buy things very cheaply. So that could be real estate, could be property. I know someone who, let me think, I think he made something like 6 times his money over as many years after the last crisis in 2002 by buying right at the bottom of the market at a ridiculously low price.
wow.
Just trading through properties. And that's without leverage, by the way. That's with no mortgage debt because you can't get it here practically. And also the stock market. Stock market crashes from time to time, and people go in, and it can rise very sharply afterwards, after the crisis.
People are creative. It's really amazing. People do find ways to succeed even in difficult circumstances. And hopefully these won't befall the UK to quite this extent, but they will to some extent, and certainly to a much higher extent than people in the UK are used to. Rob, I made a final note just to let the audience know that I believe you have written a report, or you and Nigel Farage, who you do UK Independent Wealth with. And this is not a plug per se; it's totally free. So it's just a resource that I'm mentioning. But I believe maybe you can give a quick bit about what that is. And I'm sure somewhere around the screen we can have a link to that if people want to learn a little bit more about how they can take some action to address the inflation that they're seeing in the UK. This report is for UK investors, is it not?
Yeah. Look, UK Independent Wealth exists to help ordinary folks to understand more about the investment world and to kind of take more control over their financial decisions and their money and their investments. And obviously, we are now faced with very difficult times. I mean, I think I've been in the finance and investing world for nearly 3 decades, 29 years. And this is certainly the hardest environment I've seen. And it's not good enough just to sit on cash and do nothing, because like we talked about, you're losing a lot of buying power. So we think people do need to do something, at least with their kind of long-term money, the money that they're investing in, investing for their retirement or their future. So anything beyond, say, 5 years. Doing nothing is not an option. You're going to lose so much if you don't do something. So the two main things are gold, and we at UK Independent Wealth, we have a special report which tells people the best ways to own gold. And there's lots of different ways, but we give all the details about how to go about it. And certain types of, and I mean certain types, not all of them, certain types of stocks in the stock market, I think will ride through this, pay an income, see growing earnings, and eventually bring you through the other side, protecting your wealth in general, rather than watching it just being eaten away at by nasty inflation. So, yeah, we have an opportunity for people to come along and learn about that. And if they go to the link, which I think you'll put underneath this video, they'll be able to try it out for free. I think it's for 90 days. It's all explained in the video. And if they don't like it, there's no obligation. But if they do like it, then I'd very much welcome them to come and see how we can survive this very complicated environment.
No, when I think of inflation, or when I think of addressing inflation, I will think of you, Rob, and I mean that as a compliment. It is the single biggest issue right now in global finance, and on my mind, and I think on a lot of our audience's mind as well. So hopefully this video was helpful, and hopefully they'll take a look at your report and find it to be helpful as well. Rob Marstrand, editor of UK Independent Wealth, thank you very much for joining us today, and thanks to you guys, as always, for watching at home.
Thank you, James.